Hello, friends. Today we're taking a look at Carriage Services, ticker symbol CSV. We'll be looking at the performance of the stock in the last 5 years, who Carriage Services are, the earnings report. We'll be looking also at the performance of the stock in the last 10 years and try to find a fair value for this company. Welcome to Money Talks with Martin Reyes, where we learn to take care of our money and find great companies at great prices. Carriage Services is a company that focuses on funerals and cemeteries. This is a company that I am invested in. I found them out from another YouTuber. His channel is The Patient Investor, and I think I also published a video about this company and another two companies that I was looking into investing about a year ago on November of 2023. So you can go back and get a little more information. But for those that don't know, it's a small company, and the main thing that they do is they buy funeral homes from families that are not wanting to be in the business anymore. They have 162 funeral homes in 26 different states, and they also take care of cemetery. They have 31 cemeteries in 11 states. They have great margin. Their margins have been improving. And also, as you can see, their revenue has been growing pretty steady in the last couple of years. And we'll be looking at that. But that's just a brief description of what they are. In the last 5 days, the company has grown. It's negative 2%. In the last month, it has grown 4.7%. Year to date is up 58, almost 59%. In the last 5 years, is up 50%. As you can see, it kind of has gone up and down. This company is relatively high from their average, so it's a good time to buy. Well, analysts believe that this is a strong buy. This new CEO has been doing really good on organizing the company. Their target price is at $42.50, which is another 7% from now. They report earnings on October 30th. They do pay a dividend of 45 cents, which is about 1.13% of the current price, and they're trading somewhere to 17 times, 18 times earnings, even though traditionally it has been trading at 24 times. So that is something to take into consideration whenever we do our analysis. Last time they had a huge beat on EPS of almost 21 cents, and they also beat on actual revenue. The upcoming earnings report is supposed to be in February 19, somewhere around there. Is an estimate. They haven't announced it yet, and they're looking for a EPS of about 51 cents and revenue of about 96%, which, even though whenever you compare it, looks like it's less than what they reported over here. But remember, this was a huge surprise, a huge beat. In the last 90 days, they have 2 revisions up and 2 revisions down. I would like to encourage you to subscribe to our channel, to leave a like and a comment. Let me know what you think about this company, and what company you would like me to analyze in the upcoming weeks. Like I mentioned before, I own Carriage Services. I bought it at $20.66 about a year ago. At the time, it was 2.5% of my portfolio. Right now, it has almost doubled, as you can see, 92%, 92.4% of growth in about a year, and it has grown to 5.67% of my stock portfolio. So out of those three stocks that I talked about back in November of last year, I sold um, I sold Olaplex, I sold Ammo. I made quite amount of money on those, but this Carriage Services is one of those companies that I really, really like. Once again, I am not a financial advisor, but let me explain why. If you look at the revenue, you can see that before the pandemic, they were growing a little flat. It was going a little bit slow, and then since the pandemic, they had a huge, uh, because of the pandemic, they had a lot of revenue and a lot of earnings, and then everybody thought that they were going to be having a problem on maintaining that, and they have done a really good job because of the business model that they have. When they take over a family funeral home, they don't change anything. I mean, they make it more efficient, but what they are able to do is that they allow the funeral home to continue to feel like they are family managed, and they have all they have a very personalized, very good service to a lot of the families that are going through this hard time, and those that are planning for funeral services. So this is great. Their gross margins are 36%. Earnings, as you can see, they're a little bit up everywhere, but they're starting to go since 2018, just kind of in a growth pattern. The last 10 years have grown at 10%. Last 5 years, a huge jump to 22.7%, with profit margins close to 8.6%. Free cash flow has also grown a lot in the last 5 years at 10% and 13% in the last 10. They're trying to stabilize a little bit the free cash flow, especially with the cemeteries. Cemeteries have been giving them a lot of opportunities to rebalance, to have a free cash flow earnings. With the book value per share, they had a big drop in 2021, but has been recuperated and going back to before the pandemic. So the last 5 years, it's remained a little flat, but in the last 10 years have grown at 2.7%. Return on equity is at 18%, which is good. Return on asset is at around 4.3%, which is a little low. The same thing with return on investment capital, but I'm okay with this. This is a company that I'm not planning to hold for the rest of my life, but I like this company. It's been paying me 45 cents a year. The dividend was growing about a 8.45% in the last 5 years and 16% in the 10 years. Payout is right now at 20. One of the things that they did is that they had a lot of debt, and that's part of the reason why, one of the many reasons why the stock dropped. And something that the new CEO has been working on is to making sure that their debt is manageable. As you can see right now, their debt is really, really high. They will take them 12 years to pay the long-term debt with the current free cash flow. They want to keep this way lower than what it has been. Shares. They bought a lot of shares in the last 5 years. It's a negative 3%, and about in the last 10 years, about 1.7%. So I just want to let you know that I am not a financial advisor. Just wanted to make sure that you understood that I am going to just giving you my opinion. This is just for educational purposes. I'm not giving financial advice. And I'm gonna show you how I try to evaluate a company. But that's up to you to decide whether to invest or not. So with historical multiple valuation, it gives me a price of somewhere between $42 to $36 per share. That's what historically has been trading at if we use the historical multiples. The 5-year doubling using the buyback shares of 10 years instead of 5, because normally these are 5 years. Growing it for 5 years and then taking discounted at 15%, it gives us a fair market value of $45.36. Discounted earnings, growing the earnings at a 10-year average of 11%, with the 10-year average of the PE of 24, which is the one that I'm going to be using instead of the 17 that is trading right now. It will be about $45. Payback time, growing the free cash flow. Free cash flow has been going a little bit all over, so I'm just imagining that it's just kind of keeping up with inflation and just staying a little flat. If we do that, it gives me a $50 fair value. Discounted cash flow, it gives me a almost $28 fair value, because of the average multiple of free cash flow being a little low. Owner's valuation at 24 PE gives me a value between $58 to $54 when we put everything together. It gives me a fair value average of $43.83, which is not it's a little higher of the target price, so there's still a little bit of space there. If you wanted to take a 15% margin of safety, that will be about 37%, which is a little lower to what is trading right now. Like I said, I'm not planning to add more to my position. I'm probably going to let it run. But if I didn't have it, I will be considering buying it, and I will probably take a 30% margin of safety. I personally, for this company, because it's a small company, some of the numbers are a little all over, not all over, but like the free cash flow, that will be something that will give me a little pause when it comes to the margin of safety. So that will pull me somewhere around between $30 to $31, which that will put me somewhere around where it was trading in October. Somewhere around October, September. They had a big jump because of the earnings, because they did a huge bit. So that is my opinion when it comes to this company. Let me know what you think about it. I hope that you enjoy it. Leave me a like, leave me a comment, and I hope to see you in the next video.